What's up, guys? Just give me a second and we'll get it started. Just want to make sure the background noise is not too high, being that I'm going to be playing a game and all. Just give it another minute. And Bridge Mohan, I threw you in timeout, buddy. Can't come into my stream and tell me what to do. There's a time listed for when the stream starts, and it said 7:20 p.m. So we start at 7:20 p.m. If you want to start a stream earlier, feel free to start your own stream, buddy. I'll come hang out. I'll heckle you in your own chat. I'm just messing with you, but you are in timeout for 300 seconds. I think you can deal with that, right? That's 5 minutes. Hopefully in 5 minutes from now, you'll have learned your lesson. All right, guys. So the plan is to use this as sort of an AMA. I put out a YouTube short just over a week ago saying that I planned on doing short videos to address common questions that I get. And that's what this is going to be. So we're going to get a couple games of Warzone going. And as I am playing, I will be paying attention to the chat. And during the periods where I am dead or in between games, I'll go through some of the questions that were asked originally just over a week ago. So as a reminder, this is a video game stream, but we are talking about trading. Nothing that I say is financial advice. This is strictly for entertainment purposes only. And this stream is obviously going to be a little bit more entertaining than others because we will be attempting to not get fragged and take questions at the same time. So while the game starts, there's a couple questions that I have out, and I will put these into the screen real quick, and we'll take them until we get it going. You see that there's a link that's scrolling above. That is a new link. I've been partners with Phemex for a while now. There is 6 promotions running. Just go ahead and take a look at FTX's Wix versus Phemex Wix. People in crypto get so hung up on names that they will forego opportunities to trade on fairer exchanges and honestly exchanges that don't require KYC. Yes, they're not the most popular exchange, but you can see what comes along with popularity, a lot of scrutiny. But Phemex is a phenomenal exchange. It is like the Chase Bank of crypto exchanges. It's reliable. It's got a great team. That's why I work with them. And I've been with them for a while on the core team. So I think that that must mean something because I have not partnered with really anybody in crypto in my 6 years here. And I've been with them now for years. So that is a new link, tradephemex.com. If you sign up to that, just let me know, and I'll make sure that you get your bonus. Okay, so first question. What are the most common setups that you look for during the day? So this all depends, right? If we're kind of like just on our own, there's no catalyst we're coming off of, no significant change in market structure that, creates some kind of narrative in one direction or the other. Because again, remember, narrative usually follows price. Price leads narrative. I'm doing a lot of mean reversion trading. I'm doing a lot of trading off of market structure, key contextual levels in market structure. Give me a sound check real quick. Just want to make sure the background noise isn't too much. Obviously it's going to be a bit of a different stream because we will have the eruption of gunfire occasionally. But I do want to make sure that you guys can hear me clearly. Just give me a good check. Sound check. Doesn't have to be a good one. Hopefully it's good. But there might be a little lag. I'll give you guys a second. I like to play with a basic M4 carbine. No background noise. So there's no background noise. All right. Let's adjust this somewhat. Okay.
Time to deploy to the war zone.
Checks out good. Cool. So absent any kind of catalyst, absent any kind of significant change in market structure that brings in, you know, very one-sided flows that I would expect to have some kind of legs. When I say legs, I mean something that's lasting. I'm doing a lot of intraday trading, depending on where we're developing value. So a lot of mean reversion trading. It's a lot of short-term activity, leaning heavily on price action and order flow. And obviously using the tools that you see me commonly share, such as the TPO chart, the footprint chart, CVD, and your basic candlestick chart. The candlestick chart doesn't have to be a time-based candlestick chart. You guys will see me use a low time frame tick chart. But yeah, absent any kind of significant narrative or significant catalyst that's giving us something that I think that will, again, like I said, have legs. When price is kind of left to its own devices and we're in PvP mode, a lot of my trading is shorter term mean reversion trading, taking advantage of crowded positioning, you know, very basic stuff. So you know, the setups, like when people say setups, it implies there's some kind of like textbook setup. There's a couple of them. When we are sort of chopping about and prices ranging and we're developing value, you know, a lot of these setups, I've journaled my setups a lot more recently, the specific setups and ideas behind the trades on Edgewonk, and I talked about how Edgewonk is just the superior, oh fuck, I didn't mean to hit that, superior journaling software. And most of my trades have been break from balance setups. So, wow, there's a lot of money right now. What is this? Is this like a new mode? Because I just got a lot of money in the beginning. For some reason things looked a little different in the beginning. A lot of my trades lately have been break from balance setups. So, price establishing value. I always get the self revives. I always get a precision. Let's get a UAV. Call that in real quick. Break from balance setups. You know, some common, very easy technical setups are sort of like your candlestick break from balance setups. And by that I mean like ones that are derived from just candlestick structure, which are really actionable in crypto. Such as Inside Day. Have quite a lot of these frequently. But again, yeah, absent any kind of, I guess the best way to put it, like any kind of catalyst or underlying momentum, I'm doing a lot of mean reversion trading. Fuck. Yeah, this is a new mode, and I'm not really paying attention. So for anyone who's watched me stream before while I was gaming, I don't really pay too much attention to the game after all the talk of playing and taking questions. I just kind of run around aimlessly. But we'll try to make sure that... Alright, so this is a different mode. Let's play for real. What was I saying? Absent any kind of momentum, right? Because if there's underlying momentum in the market, I'm trying to ride that momentum. Crypto is like one of the best asset classes to take advantage of momentum in. Let's see. Let's go to another question. Time frame, do I prefer to scalp? So just looking at one from the chat. I mean, listen, the setup that I have when I'm looking at charts, I have a daily chart. I've tried to structure this better for streams more recently where you guys can see that I have a daily chart set up. I have a 30-minute or 1 hour where I'm looking at a profile on those as well. And then I'm looking at either, as I've said numerous times, the 1 to 3 minute or some kind of tick-based periodicity. The 1 or the 3 minute will depend on like how fast things are moving. I'm constantly kind of switching between lower time frame or what is a substitute for my lowest time frame chart, which is really not, you know, it's not make or break to have that lower time frame chart. I'm not scalping for ticks, but what I'm trying to do is really get the best risk reward. And coupled with using order flow and some kind of footprint chart and looking at lower time frame price action, you could begin to get a clearer idea of when a shift in control is taking place, whether it's through a level or at a level. But scalping, I mean, sometimes people have taken me saying that I scalp as me trading, like, again, like I said, a second chart, like a 30-second chart or a minute chart. That's not what I'm doing with those low time frame charts. Of course, I have done that. I've taken advantage of setups, on that. But, for the most part, it's just I'm intraday trading. And I think that, again, I'm getting a bigger idea of context from a higher time frame chart, whether it's a 12 daily or weekly. And then I'm spending most of my trading takes place with me really focusing on a 30-minute chart and, again, one of those low time frame charts, which could be, and I'm going to say time frame, right? I'm going to say time frame, and yeah, that's 1 to 3 minute. But also the lower, what happened there? Something glitched. The lower setting tick chart that I use, or I've used a lower setting volume-based periodicity, meaning a candle will print for only a certain, a candle will only print when a certain volume threshold is met. So let's say you have like a 1 million contract candle. So it's only going to print candles when 1 million contracts trade, which is really good because then you could see levels of liquidity, levels of activity a little bit more precisely. But this is still kind of a substitute for a lower time frame chart because it kind of resembles one loosely. But it's when you have a non-time-based periodicity, it gets rid of some of the redundancy that takes place on a time-based chart. Like sometimes nothing's happening and your 1 minute chart is still printing candles, right? Whereas if nothing's happening and I'm using a movement-based periodicity or a volatility-based periodicity or a trade-based periodicity, if nothing's happening, nothing's printing, right? There's no candles popping up. There's no new candle is generated. So all right, I'm gonna take the next question in a second. Let's try to do some work. So I started playing Call of Duty again, like I said, back in March 2020 when my wife and I were locked in our house. And, we live in New York and shit was tough. And I always loved video games back in the day. As a matter of fact, a question at a pretty popular prop firm, an interview question was, do you like playing video games? And one of the reasons is, oh, where the fuck is that guy? He's laying down. The hand-eye coordination, the reaction times. But I always enjoyed playing video games when I was younger. I was always a kid who would spend most of my time outside, honestly. I'm happy my generation had that. I had neighborhood kids, play hockey with them, do outdoor shit, run through people's backyards, like, get real fucking dirty. But came back to video games, like I said, March 2020, and now I'm like on and off with them. I enjoy it, I have some time. Oh, this dude is on me, isn't he? Ah, fuck. What mode is this?
We lost that one, but we'll
Not like that
come
means
back
anything.
stronger
Like,
next
cop
time.
out. What mode is this as I get killed, as if that makes a difference. Alright, let's do it again. Oh, dude, Manhunt. I was just thinking about this the other day, because, like, we just live in a different world now. And, I'm thinking, like, when I was a kid, your backyard was my backyard. Like, well, in our group of kids, like, my childhood was kind of like the movie The Sandlot. Like, in my neighborhood, every house was a kid that was, like, within 2-3 years of my age. Every morning, knock on everybody's door. And we had a big woods behind my house. So, like, there's trails, and we would play, fucking army games, and we played Manhunt, though. And when I say everyone's backyard was our backyard, it was, we just ran through everyone's property without a care in the world. Like, hopping fences, hiding in people's bushes, hiding under their cars. And now I think about that, and I'm like, I don't know. Like, does that still exist in the United States? Or do people have to get worried that they're going to get, like, shot by some homeowner? Major hurdle for beginners to be profitable. I mean, there's a bunch, right? Consistency. getting accustomed to losing. You know, the idea that you have to be right is a major hurdle because you don't have to be. Like, my trading lately has been phenomenal since the beginning of this month. And I think it's because I'm really going, like I said this multiple times over the summer. Once Labor Day passes, I'm back to business mode. I go through sort of a phase change, sort of transition change with the seasons, kind of kicking back into high gear. It's kind of programmed into you if you go to school. Normal, United States school system is, based from September to June. That's kind of instilled in you your entire life. So my trading has been phenomenal lately. My hit rate the last week is like 85%. My hit rate for the entire month, which is not long, right? Because I just started taking things again very seriously and journaling very hard post Labor Day, is like 75%. So I haven't taken a tremendous amount of trades. I think I've taken like 30 trades total, but still everything has been A+ kind of setups. And if anything, it's been A+ discretion if there wasn't a perfect setup. But like, there's many times when I have a much lower hit rate where it's 50%. And what that implies is like, you're just used to like taking a lot of losses. So that's one thing that I think beginners have to get over. It's like, it's not you have to bring it back to almost like, I use baseball analogies. I grew up playing baseball, right? I mean, my dad was a huge baseball player, would have gone pro, but blew his wrist out sort of 1 week before he potentially could have been taken up by a team. Like S compound fracture, slid into first base, like career ending, joined a family company, that went bust. Dad ended up working at like 3 jobs when I was a kid. But he was my baseball coach, played since, the time I could, was a lifelong lacrosse player, lifelong wrestler. But a lot of analogies, they're baseball complementary analogies to trading. And one of them is like, your goal, is to not just go up to the home to the the plate at every at bat and hit a home run. If that's your goal, you're not going to be a great hitter. You want to hit base hits, right? Knowing that, like, also every at bat is not a make or break for your career. Every trade is not a make or break. You're ideally going to shape some kind of long-term batting average, and a batting average, for example, a successful batting average, like say you're batting 350, like fuck, that's amazing. But that implies you don't hit the ball most of the time, right? I mean, in terms of like hitting it over 500. So I think trading, you kind of have to take a somewhat similar understanding, is that like, it's not this trade that matters. It is the aggregate of all your trades that add up to make you successful. And I think that's why, I gravitated towards intraday, more aggressive style of trading always. Except earlier in my trading career, whenever I was more passive, a little bit more momentum and trend based, because, and this is what I think, I'm a more aggressive person, and 2, you get faster feedback when you trade more frequently. Like, I could see, fuck, dude just lit me up. I could see if an idea works very quickly because I could take 20 trades in the amount of time that someone might take over the course of a week, maybe 1 or 2. So 1, you have to get comfortable with losing because you're going to lose a lot. Okay. 2, another thing is, let's see, major hurdle is not starting off on the right foot and being sort of, I guess, tempted to take advantage of the amount of leverage that you have access to in crypto. Like, the idea of slow growth does not sound attractive to anybody. All right. If you're around during the bull market, that's great. People are lucky, though, if they can make that money and then hang on to it and then gain discipline. But if you don't, you're most likely going to give it back. Having a lot of capital is a huge benefit. Like, being undercapitalized it makes it a very difficult path for you to be a successful trader. So having a lot of money, obviously, and building up that nest egg and that cushion is huge, because most people want to be like, crypto. I'm talking about crypto traders. They see how this market has like grossly distorted the idea of trading and success in trading, because it is a much easier market to trade. But because of that, like, they just have they're starting off on kind of the wrong foot with their expectations. You have to, come on, dude. There we go. What was I saying? I just lost my train of thought. Just crypto giving you poor expectations. Fuck, lost it. Let's just think of some more. I could replay this, right, and just get back to my point. Isn't that funny? What else? Major hurdle for beginners to be profitable. Kind of winging it. People wing it in the beginning. They think that, they have a little bit of success trading. Everyone I know who's known that I've been a trader, right, which is, basically all my friends. My life has been having my friends come to me after this bull market and tell me how they're good at trading, right? So they've taken a couple successful trades and they've extrapolated that into some kind of long idea of success, and then they begin to like do future math based on what they've done, and they've suddenly they have some kind of new career they're working at, and they have expectations that their performance will continue, and again, just starting off on the wrong foot.
Next time will be different. Return to base for debrief.
Wait 1 second. There's something else I want to say. That's 2 points I've lost because something in the game has happened. Let's get back to that one. What was I gonna say? But the idea that it takes a long time to, a lot of, again, beginners might have some beginner's luck in the beginning, and that might just be a string of randomness, right? Sort of just the stochastic process, and they're benefited from that period. And they think they could, like I was saying, they think they could kind of just wing it. In the beginning, like, your best bet is to journal, track your performance, try to figure out your sort of demons early on. And people don't do that in the beginning. They just kind of try to swing for the fences constantly. What else? Let's go to another question up here. Common setups. Did that one already. Did you buy the minivan yet? No, I didn't. Oh, that's cool. You could do this. That's cool. Let's see. Dude, streaming and talk, gaming and talking about this stuff is very difficult. I've done this. So next question, what's your perspective on compounding for someone with consistent wins? I've every time at the outset been like, I'm going to stream and game at the same time, talking, prices and the market. It's almost impossible. And it's almost like I have amnesia to that. It just requires too much bandwidth, clearly. Like, my brain is trying to process everything visually that's taking place in the game. And I either completely shut off to playing. Like, you'll see me like just running random places that I have no intention of running to. Like, I'm already starting every game off different than how I normally would. But then if I'm playing the game, I'm completely whiffing on taking questions.
Check weapons and gear.
All right, so what is your perspective on compounding for someone with consistent wins? Listen, if you want to grow, you have to compound. I mean, I've gotten to the point in my trading career where I'm not swinging for fences and really looking for massive growth anymore. It sounds, maybe like a lack of ambition to some people. I have gotten to a point where now I have everything I want. I could still trade with significant size and have incredible years. But I'm not young anymore where, I'm living with my parents and I could blow up accounts and, go through that process over and over again. I have a family, a child on the way. So I am purely trading like a business, seeking, as Sue would not say, linear wealth rather than, logarithmic wealth. In the beginning, I think that you have to, and what I mean is, like, I trade with smaller size than I did prior to, like I've said many times before, prior to even getting married. I'm not trying to, I feel like I've kind of made it now and I don't have to do anything crazy. I just have to kind of be in wealth preservation mode and still bring in money consistently, which is still phenomenal, right? But this all depends on the amount of money you're working with, right? But when it comes to compounding, you have to, your goal should be to compound. And the way you compound is you have to incrementally increase your size over time. And the way that you could confidently do that is, honestly, this gets back to kind of the idea of journaling and building a playbook of setups that that you can consistently lean on, or that where you're able to distinguish where you are most effective, or rather what setups you're most effective at, so that you could begin to make serious EV bets, right? If you know that there is a trade that you have really sharpened to the point where, you you are constantly crushing this trade, well then you should, this is going to be, there's going to be people that oppose this idea. With intraday trading, I will just say this, intraday trading, lower time frame trading, where things are kind of, they're all the same kind of trade, I wouldn't get too fancy with sizing differently. I would just treat them very mechanically, kind of all trades are the same, and not do anything in terms of sizing massively from one to the next. But in special situations, right, let's say that you've identified a setup that very infrequently happens. When it does, you know that it's time to slam on the gas pedal. These are situations where you have to, with the aid of data, right, so you've kind of back tested this or seen it happen enough, these are situations where you have to up the ante. And you have to compound over time to get growth. So you can slowly compound, right? You know, as you grow your account, what normally happens is as you grow your trading account, you're going to get more confident when you're trading well, and then you're going to size up more than you should. And you're going to kind of reach that, you're going to reach like sort of a, you call like, imagine like a governor in a car, right? You're going to size up too big in the beginning, being confident, you're going to take a haircut, and then you're going to find your sweet spot over time. Like, okay, I'm comfortable trading the size that I used to. I know I am beyond that now. I can back this up because I've been journaling my performance, right? The data is true. And I know that I make mistakes when I size up to this amount. So I, you know, doing the math, you kind of find the sweet spot between those 2 points. And that's really what it is all the way. Now there's very quantitative ways to size into positions and compound over time. That's not me. That's not, you know, how I've done it. I'm not like a quant by any means, being extremely efficient in that fashion. But you'll find your, I guess the best way to put it is compounding. You'll find your comfort zone. And ideally, you should continue to step up over time. You should step up your size. One thing, though, that I will say is that depending on how you're trading, what you're trading, when you're trading, you'll run into like the ceiling potentially. Most people never have this issue, but you will run into a ceiling, right? If you're trading like very low time frames, you know, scalping, I won't say a specific point because, you know, again, it's probably something that realistically most people won't have to deal with, but theoretically you run into an issue, right? Because at some point you're going to get to a certain size, you know, hopefully all you guys get there. That's, you know, best wishes. At some point you will get to a size where the marginal return obviously is diminishing that much more with each incremental increase in size. Like you're going to, by entering the market, you have an impact on the market, you become the market, you influence the market. And, you know, you could, the best way I could say to understand this is like, and again, this means you have to acquire a certain amount of money, but take some size and trade small pairs, alts. And you'll see how the market changes as your size increases over time. Like you can't trade the same shit. You can't trade the same setups. You know, market impact becomes that much more serious. I want to hop on this, fucking, what's it called? Balloon thing. All right. So next question I see is, it was on that page that I shared. Get started from zero with intraday trading and get to 1 to 2K month on average using 100K or less starting capital. All right, let me just show you this question real quick. Right here, screenshot that. Mark, I don't know if you're watching this, buddy, but that is the absolute wrong way to think. That is a path you want to avoid by all means in the beginning. Like if you want to talk about mistakes that traders make in the beginning, it's thinking in sort of a predictable fashion like that about markets as someone with no verifiable skill yet. Because if you were doing something successfully and trading successfully, you know that that question would never be, oh, were you fucking kidding me? You would never ask that question. The idea of thinking of trading as like a passive income tool is you're just in for a poor experience. Like you're not going to be warmly welcomed, put it that way. So I can't really say, I don't want to say anything like specifically helpful to that because it's just, you have to get that out of that mentality. Like you're not there yet clearly because you're asking that question. it's not realistic. There's a difference between it's not realistic and do I know people who have done it, right? So all these things, like all these kind of, you know, trading is very difficult. Only a certain amount of people succeed, blah, blah, blah. I know friends and people and myself who have realized that a lot of rules are bullshit, that, you know, you could exceed those expectations. You know, that's the average. There are outliers, obviously. But I don't think it's a good idea to start off with that advice. So while I do know people that started trading not too long ago and in this market more than any other have had the benefit of success of being successful early on, it's the exception and not the rule. This dude now is probably gonna kill me at the same spot where I killed that dude. No, he's gone. All right, I'll look at the questions in a second, but I haven't even focused on the game, and you know, it can't be this embarrassing. Oh, and as I say that, the game glitches, and I'm playing as a caterpillar right now. All right. Let's see. How important is it to decrease the amount of information you're taking? Less information is better. One of the first things that new traders do is like look for, you know, try to overturn every little rock and piece of sand for, you know, in the quest for like some kind of edge or some kind of silver bullet. It just doesn't exist. Complexity is a problem, especially with so many indicators and so many, you know, people in your ears with different strategies, and, you know, half of those people, if not more, being complete bullshit artists to begin with. The name of the game is simplicity. KISS, right? Keep it simple, stupid. If you're an intraday trader, like, and I like to tweet a lot, right? I give my opinion on what is that? I give a lot of color and opinions on everything taking place because it's I don't know. I have a Twitter. It's my porch to shout off of. It's easy to do it. It's always there. But not 9 times out of 10, stuff that's taking place doesn't even affect my trading. Like, my trading is based on where people are getting most active, where people are getting involved, you know, where the market has to go to get more people involved, to make some people puke. And it's a lot of just positioning. So what inspires that positioning? Okay, it's good to know that, right, for future reference. But most of the time, there's way too much information at your fingertips, and you should really just start from the ground up and having an understanding of, one, price action. 2, something commonly overlooked is just how the market works, like how order flow moves prices from point A to point B, like how an exchange works, how different order types, how you know, how the limit orders and market orders interacting create movement, how changes in you know, liquidity affect price. Like microstructure is really important, and I don't think most people have an understanding of that. Let's see. But taking it right now is the time where you could really get inundated with information, because we're in a very news-driven, sort of event-driven environment. And everyone has a soapbox, and everyone has an opinion. So you have to really sift through all this shit to find good, you know, good signal amongst a ton of noise. But I think for the most part, most people get away with not focusing on any of it, honestly. Learning how to use XO. Listen, there's plenty of free shit out there on YouTube. I'm sure if you just Google or YouTube XO charts, you could find like 100 different videos, or just go to XO's Discord. Go to XO's Discord, and they have a knowledge base and educational base. And they have like my old videos up there from Block Roots, where I had a course. Block Roots course is still up. It's like $49. A lot of them we've just given away. Let's see. If someone new comes to you and asks how to learn intraday, what to, I tell most people to don't bother. Honestly, I tell them to use all their free resources first before they bother me. Read books on technical analysis to get an understanding of just a basic TA, basic support and resistance, supply and demand zones. Going to order flow as a beginner is going to be way too, I think, overwhelming. Because when you say beginner, you're talking about someone who's fresh, has no fucking clue, you know, their ass from their elbow. And I think it's best to start, honestly, like something like baby pips, learning basic price action. It's really difficult when you get these kind of questions because people ask you questions that you have over a decade of experience dealing with, and they kind of want like a sound bite, right? Like, I have been placing orders now in markets for almost 20 years. Like, reality, when I think of my age and the first time I, opened up my own brokerage account, it doesn't mean I've been successfully doing it by any means. Like, I've been successfully trading on my own full time for like 7 years now. So it's going 7 or 8. So I don't want to dox exactly how old I am. I think 7. We'll just say 7.5. We'll meet in the middle. But I've had a background, right? I worked for a family office. I had the benefit of being part of a prop firm. Early on, right out of high school, one of my first jobs was at one of my buddy's brother's prop firms, where I was not doing much, but I was able to be surrounded by some successful people, and it had an impact on me. So learning on your own versus like seeing other people make mistakes and learning from them are two different things. I had a job at a bank. I worked for a major bank. Yeah, it's more of a job where when you're starting off, you spend more time on the phones than anything else. But for someone who's brand new, like, there's no way I could synthesize all of what I've learned in just a couple sentences. So I would honestly send people to the beginner section of Google and say to Google, how to trade. How to trade price action. Like, Bob Vollmer has good books. Get Murphy's technical analysis book. Technical analysis of the financial markets. If you want to learn some profile basics. What the fuck? Oh, you know what? I'm not paying attention at all. This is different because they're starting off with your loadout. Now, I know I've been playing this entire time, but I'm thinking, what is different right now? Because I'm trying to answer questions at the same time. And we're all starting off loaded up. And I'm running around like I got to collect shit. All right. We'll start off at a new foot after this. Even I'm not paying attention at all. I think you guys can see that this is near impossible to do.
Watch the sky.
Rage serum. What the fuck is that?
Fired an enemy radar jammer in your area.
Who's still up here? Anyway. Hold on one sec. What was I saying? I was saying something else too. Let's see. How do you spot bots? Hold on. I'm just looking through the chat, but also trying to like pay attention away and hear it. That was turbo lucky. That dude had me. He sucked. I mean, he had to suck because if he couldn't kill me right there. Let's see. Oh, fuck. Hold on. Okay. Because I see I'm kind of backed up with the questions. I want to make sure I'm starting at. It's played up. I think time, Ozzy. What do I think separates? Listen, you can put in all the time in the world, but if it's not purposeful, it's not going to mean shit. Like, screen time, there's a difference between being in front of a screen and paying attention and learning something at a screen. But that being said, I do think that screen time is the thing that separates really successful traders. And just think about it like anything else. Oh, shit. Did I just ice that dude? Think about it like anything else, honestly. Like, the more experience in any field, the more experience you have, basically the better off you are. You've seen more, you've experienced more, you're able to sort of identify patterns more frequently and faster rather. And it doesn't have to, I'm not talking about like patterns in price action. I'm talking like patterns in behavior, patterns in the environment, whether that's what's taking place in the macro or what's taking place down even to, you know, lower time frame. But yeah, I think it's definitely time. Time in the market beats timing the market. VPVR. I don't know. I use dark mode at night. I don't use it during the day. I like light mode. Best cliche. Shit. Buy low, sell high. No. Sometimes it's sell low, buy high. No, listen. Like, there's a lot of like trading wisdom that's absolutely bullshit. So what I will say is like, I can't think of just a cliche right off the top of my head. I write some of these down and just for future reference because they're funny. Because they're also not true. Let's see. There's just a lot of, I'll just say like when you do, if you're a new trader, you're going to start off reading like sort of the cardinal rules. And yeah, there's some really important ones like don't average, you know, losers average losers. You know, don't average down. Like if it's what's the way, I forgot how I put it. When in doubt, get out. Like one thing you have to get over is the idea of, like I said, losing. So there's many times when I get out of a trade that, let's say 3 trades down the line ends up working out, but I've gotten out of it 2 or 3 times because I just had the heebie-jeebies and it didn't feel right and it wasn't behaving. And then finally, bang, I get it in at the right time. It's doing the thing that I wanted to do. And listen, I probably lost some money doing that for sure, but I finally feel confident. And when I'm not confident, I get the fuck out. So when in doubt, get out. There's a lot of garbage, though, that you'll read in these basics books, right? Which I think are important books for anyone's new. I'm like basically a fucking collector this game. I'm not doing shit, but just like running around randomly and picking up things like I'm playing Mario. But there's a lot of stuff you'll read in those books that you will learn over time, and you have to learn it on your own. Don't skip it, right? You want to build that foundation and develop your own style, and then kind of shave off the fat. But there's a lot of stuff you learn early on that is just kind of repeated for no reason. Like, it's not true. There are rules that you can break. Absolutely. There are rules that I frequently break. Oh, here's a great one. I don't use stops. I sat down with Chris Cidiel. He was just, we went out to dinner 3 months ago. He's a really famous, well-known vol trader. He was just on the Chat with Traders podcast. We went out to dinner at a popular restaurant around where we live because we live pretty close to each other. And I was talking about how I don't use stops. I was also talking about how I put 30% of my portfolio in one trade one time, going back to March 2020 on one particular setup. But this is when there's a dislocation between derivative prices and the mark price and the index price. But I was like, dude, I don't use stops. He's like, what? And I'm like, well, I have invalidation for trades. I have a tail risk stop on. So I have something on. It's not something I ever want to get hit, but it's in case shit hits the fan. This thing is going to kind of protect me from total catastrophe. But I don't really use stops. Like, I manually pull myself out of trades when they're not doing what I want them to do. For my scalps, this means that I'm pulling myself out of a trade typically when it just doesn't work as fast as I want it to work. Like, all right, if it's an order flow based setup and there's some kind of positioning that I'm thinking is going to unwind, unfavorably in the, for the people that longed or short. If I have an idea like, okay, this low was sold into, this high was bought into, this new positioning is going to fold. If I have that idea and then the market like trades back through their level and they're back on side, I'm like, all right, I'm just going to get out of the trade because let's say we moved away from where their entry was, where that risk came in, and nothing really happened. So maybe my idea is flawed, right? Maybe this order flow is like direction, delta neutral order flow from a different trade leg, and they're not sensitive to price movement. Whatever. Point is, I just get out of the trade when it doesn't work. Then there's time-based invalidations. There's volatility-based invalidations, and sometimes I have a hard stop on just based on market structure. But the point is, like, That's a rule that you hear. You fucking better have a stop on. You have to have a stop, blah, blah, blah. Like, if you actually spend time to think about it, it doesn't make any fucking sense. Fuck, this dude's gonna kill me. It doesn't make any sense that you should say ever that your trade is wrong if price ticks this specific point. You know, based on the tick value, minimal tick value setting of the exchange, right? So like, oh, if price hits, let me get this straight. If price hits 18,115, like my trade idea is wrong if it just sweeps that level? No, it's always going to be if you have a invalidation based on, let's say, a low holding. Well, how do you define that low holding? Like, you might see, it might be based on time, right? Price might briefly come through that low and then it gets rejected the fuck out of there really fast. And all right, so why would I want to be stopped out for noise? Or let's say, you know, there's a situation where price comes through a low. It might have been a place where someone might have a stop. You know, stops get ran, which frequently happens. And I could look at that on low time frames and see if price is very quickly moving out of there, if prices, you know, buyers are getting soaked, sellers are getting soaked. You know, right, my point is there's just a lot of discretion that I'm applying rather than just placing hard stops. And that's like, again, a cliche of you always have to have a stop. Again, like I said, I do have stops here and there, but most of the time, if I have a stop on, it's if I'm walking away from the computer. I'm an intraday trader. I'm most active New York session, and I got to take a piss, you know? Sometimes I will just listen. This is like, we're just being honest. Sometimes I'll be like, you know what? I don't want to scratch this trade due to my shortcoming of being a person. I'm just going to place this trade and place a stop on and walk away from it, because otherwise I'm going to micromanage it. I'm not hitting this dude. Where I'll place a stop and I'll be like, okay, I'm just going to let the market do its thing. And, you know, in some cases with that same setup, I might not. But not to say I never use stops. Jesus, I'm playing terribly. I swear. Whenever I'm playing by myself, not talking, I actually play pretty decently. Let me just block out that person who's spamming. Yeah, the trend is your friend. That's right. Sell the news. Almost always works, though. You know, especially, just think about, listen, in crypto, I was talking in a chat this morning to my buddy McKenna. Of course it does. In crypto, you could almost always assume that leverage is long. It's almost the best to default assume that any kind of leverage in the system is on the long side. Like, people don't come to crypto to short this market outright. Like, people short the market, but they don't come to crypto to short it outright. And if there's any buildup in OI, it's almost always over the longer time frames it's almost always, unless there's a clear dislocation between the futures and the spot price that stands out over that time period where OI is, you know, changed drastically, it's almost always long. And sell the news is almost always the case. Buy the rumor, sell the news, leading up to positive events. It's just the way it is. If you think about it for more than a couple seconds, you know, it'll make sense. It's one of the reasons why CPI had such a whipsaw recently, and it's because everybody thought CPI was going to be improvement. I did too. I think inflation peaked. That doesn't mean that CPI can't be, you know, can't jump up and down during this period. But still, everybody thought it was going to be an improvement. Another data point was White House always comes out, has said something recently. The only times they haven't was when CPI there had been some kind of improvement. Okay, this time they haven't. Oh, it must mean that there's an improvement. The market was very crowded on the long side in anticipation. Like, we all were taking for granted that higher prices were just going to come because there's a decent change, decent rally. You know, it had more legs. But it clearly, at the first sign of bad news, it shit the fucking bed because there was so many people, you know, crowded on the wrong side of the market. Trend is your friend. I hate that one. Yeah, that's true too. And, you know, funny thing about like trending and ranging markets is, like, when you're doing a video after the fact, it's so easy to point out a range after it happened. Difficulty of trading a range or a trend is not being able to see the future and think that it's going to either continue to range, begin to range, continue to trend, or begin to trend. With the benefit of hindsight after the move already happening, it's very easy to say, oh, look, like especially when you see people talking about ranges. Oh my God, the range was so easy to trade. All you had to do is sell the high, buy the low, blah, blah, blah. It's like, dude, you didn't know that was the fucking case until it actually painted a long enough range to where now, are you even looking for the range move anymore? Right? Because each additional test of the high or low that is clearly now painted is going to be, in my opinion, built up with that much more fuel on the other side to make a move, right? To find an imbalance move outside of this. The trend is your friend, same thing. It's just one of those cliches. Like, it's sometimes really good to go against the trend, especially when the trend is consensus, crowded, overly positioned. And this is where building some kind of case around loss of momentum, change in market structure, where it's most advantageous to be one of the first people to go against the trend.
Holding for deployment. Take this time to ready up.
Yeah, Callus, that's one of the best things that you can do. And I've actually done that. Listen, market, when we went into a bear market, and I've said all these things many times before on streams, like as I was doing them, in my personal trading as it was taking place, rather, I've made announcements like, we're going into a bear market. I'm just going to trade less size. The size that I trade is still meaningful. Like, people have a really skewed perspective of money in crypto. The size that I trade probably would make traditional market traders blush, but it's smaller for me. And again, it gives me that much more cushion. And that does help when you're not using hard stops, right? And especially like a lot of my trading, when we start moving in favor, I take profit. I'm pulling out of the trade after it's put in sort of what I expect is a standard, standard amount of points, whether that's 200 basis points, 2%, 3%. I'm pulling off my risk right there, so I have some breathing room. Yeah, things are looking pretty crappy. Shelter housing, FedEx CEO today. Listen, it's just an unprecedented time. So I made a call a month or two ago back. I said I think the market is in the process of bottoming. I said I think Bitcoin bottoms in Q4, puts in some kind of low tick. But I've said every single time, like, listen, this is kind of a mental masturbation thing we all like to do. We like to, give our opinions on the long. It's really, really difficult to tell you where price is going to be a couple months from now. Like, it's way easier to understand. It's way easier to guess accurately where price is going to be 5 minutes from now than where it's going to be 5 months from now, right? So we make these longer term projections and predictions because, we like to hear ourselves talk, and, we like the attention of being right. But at the end of the day, like, if the market doesn't behave, I'm not going to be banging my head against the market, right? I'm not going to try and impress my will on the market. This is a unprecedented time in markets. Like, for anyone who's been trading who's like under the age of 37, has never been trading in a environment that was non-accommodative. So shit, that is, most people in markets have a pretty one-sided view of things. That being said, there is a point in which, we're not going to be able to service our own debt at the rate that we're going with the Fed's plans to hike. It's kind of like we're waiting for something to break before things can improve again, which is a sick thought, right? But listen, like I said, it's an unprecedented time. Honestly, it's been a really good trading period. It's weird to say that because there's a lot of people that have differing opinions on that, but how the fuck is that guy hitting me as I'm dropping perfectly? Oh, Jesus. Ah, Jesus. A lot of the trading, my bad, it's been great trading. Bitcoin is a levered S&P. So I think that's nice. I think there's still opportunities, but it's not the bull market, right? It's very predatory. It's PvP mode now. It's, You better have your shit together. You better not hang on to any ideas too long. Narratives have really short legs. So, yeah. I think that we have a year. We probably have a year of shit. So maybe next summer things start improving. Q2 next year. Yeah, negative funding is it is rare, but listen, you also have to consider the funding's, part of funding is the overall liquidity, so that has an impact on funding, on those prices being able to be kept in line. It's definitely a good tool for in terms of positioning, but it's not a, again, silver bullet. Crypto Cartel 2017 PDF. Crypto Cartel, like Cartel, the Discord. Oh no, Tom. My thesis is that we see. Listen, September is historically a shit ass period. Very articulate, right? But listen, it's a midterm year. The few times where we've had midterms and this set of shit conditions going into them, there's been some great rallies from October on. I think that, yeah, that's the case. When I say a year out, I think just a year of the Fed being like this, and the overall macro picture being this uncertain. As you can tell many times, you could see the market moves independently of the economy quite often, where there's moves that just don't make sense given what's taking place globally. So longer term rallies, all of that, periods of outperformance, they can happen during all of this. But I just think in terms of like an overall consensus of things being secure and us being kind of back to some level of normalcy, I think we have at least a year. You have people talking about a decade of this. I don't see that happening. But, I mean, what do I know? Probably going to wrap it up in a couple minutes. Been doing this for almost an hour. Okay, so it's a good question because a lot of people ask, hey, how much money do I need to trade? I'm like, I don't know. What's your situation? Adequate amount of capital without having income or time constraints to affect your psyche. Well, one, that does depend on your income. If you're like someone who's trying to be a full-time trader and you have shit to pay for and you have a mortgage and bills and car and fuck, every little additional thing just means that much more. You need at least, I mean, I know people that started with all amounts of money. So like if you're out there and you're gonna hear this number and you're thinking, fuck man, like I have so far to climb. I know people have done it with way less, and they've done it through consistency, and they've just grinded, they've absolutely just grinded the skin of their knuckles off doing this. But I think this safe amount is like, it's over 100K. It's around 250K, I would say. But listen, that is my opinion. I've been fortunate enough now to trade for myself full-time, and I've been doing this successfully in that period. I've had my ups and downs, but I also have, from all this and doing it right for a long time and building a portfolio, I have a good nest egg to sit on. So I'm not in a position ever where I need to make the next trade to like pay my bills. Do you know what I'm saying? Everyone's story is going to be different though, right? And I hope everybody gets to that point. I saw what happened. I traded in 2017, 2018. I was actively in crypto. Actively in 2017 and 18. Started trading crypto full time. Stopped trading legacy, And I saw everything that took place last bull market, and there's no better experience than seeing one bull market and bear market and what that does to people and how things drastically change and how, you know, your best ideas all go to fucking, they come back down to earth. And having the humility that, you know, you need, being instilled in you from that, I think that's experience though, right? To never make mistakes and give it back. So I'm not like boasting, but I've kept my money from this last bull market. But caveat. Oh fuck. I did not take the amount of risk that a lot of people take. So I got a wife. I have horses. I have a child on the way now. I never did, I never aped in my net worth into shitcoins. I take profit a lot. I cut my trades early all the time. I just have always traded like a business. So for me, survival is the most important thing. And that's actually the most important thing for everybody is survival. Being able to show up to the next trade. Losing, that dude just tried to kill me, but he leapt to his death. Not losing all your chips, right? You want to play poker and play well, don't lose all your chips. Well, same thing goes for trading. You have to have money and you have to have chips at the table. Oh, so you are talking about Cartel. Yeah, I actually was in Cartel, a very well-known Discord. At the time, I was in it under a different handle than Kenner and Clark. But it kind of, like a lot of Discords, it's kind of gone. It's become something different. I don't think I've been in Cartel's Discord in like at least a year and a half, 2 years at this point. And it was a completely different place back in 2017, 2018. Yeah, listen, getting that one of the things I said earlier was like there are some people that they can grow a lot fast and some of them realize what they've done and that it was by accident and that they don't have skill yet, and then they say, okay, I'm gonna buckle down and figure this shit out because I have all this money now. And that's, some people are able to do it that way. I know a lot of people that grinded it out. Also, starting with nothing is no way to start anything, right? Especially trading where you need capital to be able to do this. And the more money you have in trading, the better off you are. Hands down. Okay? It's just absolutely the case. All right, I'm not playing this game at all. I'm not paying attention. All right, one more round and then we'll wrap it up. After this deployment. It's impossible to play this and take questions at the same time. I think I realized that. I'll do these in this format, but there's no way that I'm going to anticipate playing, well. Oh, fuck. I'm trying to block that person who's commenting. All right, guys. That'll be it. I'm going to wrap this up. I hope you guys enjoyed this. It was kind of last minute. But I will be doing these each week. So if you enjoyed this, leave a question or whatever questions you want below in the comment section. And I'll take from those questions next week and do the same thing. But your questions I'll answer first. And yeah, these will all be left up. And that's that. All right. I hope you guys have a fantastic night. Thank you for experiencing my horrible play.